So, of course, this is a story of a rising imports bill and, I suppose, slow growth in exports.
Indeed, Sam. What we've seen in the first half of this year is that exports rose quite significantly, well, about 6%, but it has been outpaced by the rise in imports, which is around 12%, nearly twice as much. So that is definitely not a good sign on the face of it, but if you dig a little bit deeper, then there's more to the story.
Yeah.
And specifically on the import side, we'll see that part of the rise, or the large rise in imports, was the 45% increase in machinery and equipment during the first half of this year.
So let's take a look at that, because 16.83 billion rupees spent on importing equipment, basically. Some might say that this is a signal of economic growth and spending for future growth. Would you agree with that?
I totally agree with that. I think that while we are looking at a current account deficit that's likely to be somewhat higher than we probably would have anticipated earlier this year, that at least the money is, or the spending is going into infrastructure and other development sectors. And that is good for growth over the longer term, as it means that Mauritius will probably get some more sustainable growth because of the investment in infrastructure particularly, which is obviously job creative and have other positive spin-offs.
But in the short term, I suppose it's the Europe story that we have to worry about, because around 60% of exports still going to Europe. And if you continue to have lackluster growth there and slowing growth and a double-dip recession, you can only expect exports will continue to come under pressure. And this deficit, what's the outlook for the deficit right now?
Well, of course, Mauritius has got structural issues. I mean, you mentioned the fact that they're very dependent on Europe for their export market, but at the same time, as a small island economy, they are very import intensive as well. What the result is, imports are always going to be substantial, and in this case, on top of the normal consumer imports, there's of course the big focus on investment imports. So for the year in total, we probably have an estimate of around just over 10%, of GDP, the current account overall, and that is probably only marginally more than last year's 10.3%. But on the short term, not a good sign, and it may have some negative implications for the currency.
Okay. Firstly, looking at this current account deficit, are they comfortably funding that 10% deficit right now?
At the moment, it certainly seems so. That is the case. So again, there's a lot of spending going on, especially in the private sector, tourism sector as well. So I don't think that they've got a massive problem in funding it, but it is something that in an uncertain global environment, that is a big risk for them.
In terms of the rupee, though, I mean, you talk about the rupee possibly weakening, but it's been pretty steady so far this year. It's trading just above 30 to the greenback right now. Of course, the dollar all over the place as well, so it's hard to tell what the outlook is for the dollar. But,
yeah,
it was at 29 at one stage at a low this year, and it hasn't really moved much. So it has been steady so far.
It has been sort of trading in a very narrow range. Yeah. But, of course, looking at a bigger picture and further out, the risk does suggest that a possible depreciation of the rupee, although at this stage we do not attach a significant depreciation, but the risk is still there.
So all the data that we're looking at right now, current account deficit comfortably funded with concerns, trade deficit widening, possible concerns around the currency, slowing growth. I mean, how does this impact your overall view of Mauritius right now?
Mauritius being, like I said again earlier, very dependent on Europe. There is a bit of a question mark on its growth potential. Growth has been very lackluster in some of the key sectors, for example. So while we've still got growth of around 3.5% factored in for this year, I mean, there's certainly downside risk to even that number. But I think over the medium term, there's potential once global issues are working itself out, that Mauritius has got potential to grow a little bit stronger.
Well, we certainly are all hoping that global issues sort themselves out sometime soon. Doesn't look like that at this point in time, but thank you so much for joining us right now.